Market volatility was caused by Sam Bankman-Fried's degeneracy. It's time to return to the fundamentals of altering finance at this point. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. November 15, 2022. Cointelegraph tweeted, Sam Bankman-Fried caused some temporary market turbulence, but it's time for crypto to get back to the basics of transforming finance. The fall of the FTX exchange is being celebrated by pundits as the death of cryptocurrencies and venture capitalism as a whole. However, it is not. Sam Bankman-Fried was labeled the king of crypto by some of them, who promptly executed the king. Thus, in truth, crypto never really had a king. The collapse of FTX may be the end for Americans utilizing unregulated exchanges, and it most surely spells the end for tokens designed just for exchanges, but cryptocurrency itself hasn't changed at all. The profit at any cost philosophy of traditional banking, which is the underlying cause of the FTX crash, is a deeper issue. Despite all the lip service given to FTX's status as a regulated company, the exchange ultimately surrendered to profit-driven fraud, like so many other of its traditional competitors. The stain that FTX left behind has nothing to do with actual cryptocurrency, similar to what Enron does with actual oil in the ground. This leads us back to SBF and the quantitative trading business Jane Street, where he first started. The quant trader SBF posed the question, why would you ever utilize a decentralized exchange, and then provided his own response by improperly managing billions of dollars in client funds. But despite his history, SBF wasn't a failure. Despite not being a cryptocurrency enthusiast, Warren Buffett is famous for the following quote, "You only find out who is swimming naked when the tide goes out." It turned out that SBF had no trunk in the clear Bahamian water. He either underestimated the risk he was taking or did not consider it at all, overleveraging FTT, his firm's own loyalty point, which was actually a $4 billion capitalization store of value, and suffered from that bet. It's time for the cryptocurrency business to break away from the 10x mentality of striving for large profits and instead put more emphasis on the principles that attracted so many of us into this world. The next meme coin, the next extra app, and most definitely not creating your own tokens to finance risky business activities were never the focus of the cryptocurrency industry. It has to do with eliminating intermediaries and achieving financial self-sovereignty. It's time to return to this maxim. Cryptocurrency trading is not a game of quick profits and speculative wagers. The idea behind cryptocurrencies is to recover the daily 3% rent that the finance sector extorts from individuals and companies all over the world. Cryptocurrency is about programmability and examining what tens of thousands of knowledgeable developers do when you offer them a real API in exchange for cash. Cryptocurrency has the potential of more than simply financial gain. It also holds the promise of a society whereby geography, gender, race, or creed are not barriers to accessing financial services. It's a system without the brokers who extract wealth from us at every step, and where greedy persons can't use our life savings as their checkbook at the roulette table. We've discovered a new bet to support by accepting FTX. Digital assets usually experience a turning point during crypto winters. Even if winters devastate values and decimate lives, they also leave us with the authentic innovative products from the previous bull cycle. We have the option of working to undermine credit card firms, bank the unbanked, and shut down payday lenders, or we may continue to allow speculation and trade to govern our industry. Either the grown-ups in the room will eventually stand up or we'll keep being personality-focused. It's time for our industry to develop in terms of our goals, expectations for returns, procedures, and systems. A $1 trillion sector that will completely rebuild the global banking system is just waiting to be born. Although some people may not find financial infrastructure and business applications to be as interesting, marginal efficiencies will ultimately deliver cryptocurrency to every home in the world, 1 penny each transaction at a time. A noteworthy silver lining to this entire cloud is JP Morgan's recent admission into decentralized finance. To conduct multi-legged options bets, JP Morgan didn't do race in the cryptocurrency industry. They can generate money by trading in a variety of ways. They demonstrated how, in the coming years, you won't be needing mainframes, data centers, or hardlines to do sophisticated financial operations. You'll simply need the blockchain by starting with an on-chain lending pool utilizing a high-speed, affordable network like Polygon. Public regulated enterprises like JP Morgan are demonstrating that it is possible to upgrade the TradFi system in a systematic, acceptable, and auditable manner. Now is the time to concentrate on a future in which intelligent enterprises use sophisticated software and procedures to eliminate middlemen from digital transactions. A future when individuals may borrow funds at prime plus 1% as opposed to the high rates that banks currently charge. In the coming years, rather than getting paid every 2 weeks, people would be compensated every second of working hours or day through a smart contract. The market is prepared. It is possible to keep track of and account for your assets using advanced techniques. To guarantee that digital assets are secure as use cases increase, there are forward-thinking administrators who can create compliant circulation of fund structures and auditing standards. Best practices exist for managing your wallet and for custodians who are required by law to secure your cash and refrain from lending them to other parties for irrational transactions. The industry is prepared to advance, and if we truly want people to leave the outdated system and embrace digital assets, it's time for all of us to advance alongside it. November 22, 2022. According to CoinDesk's tweet, crypto exchange at BitGet Global has registered in Seychelles as part of its roadmap for global expansion. In an effort to broaden its services, BitGet, a cryptocurrency derivatives exchange, has registered in the Seychelles. The exchange, which is now based in the Seychelles, announced last week that Brazilian operations had begun and that customers would be able to buy cryptocurrencies with rails from Brazil. BitGet announced earlier this year that it intended to hire 1,000 new workers before the end of the year. By the first quarter next year, the exchange is hoping to increase its staff from 800 to 1,200, according to its updated target. The International Business Companies Act of 2016 governs the Seychelles registration. According to BitGet's expansion roadmap, the firm intends to establish more regional centers. Gracie Chen, the company's managing director, stated that the Seychelles registration provides BitGet with a beneficial environment, enabling us to start cooperation with partners and fortify financial ties. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.